Hi, welcome to MyWealth.com. I'm Mike Conlon. I'm one of the senior instructors with the courses. Welcome to today's blog. Today we're talking all about earnings. Okay, well, the second quarter has just come to an end, and everyone on the street is anxious to see what the results were. According to Bloomberg, stock prices in the second quarter had rebounded sharply from the previous quarter, and the stock indices were up the most since they've ever been since 1998. Okay, of course, much of this has to do with the fact that the first quarter was one of the worst quarters in history for stocks, but let's not ruin a good story for the want of a few facts. Still, the question remains, will the markets continue to rise? In order to see if this market has legs and can continue, we first must take a look at what's been causing it to rise in the first place. Okay, quite frankly, the only thing that's really causing this market to rise and move up is the hope and prayer that second quarter earnings aren't going to be absolutely atrocious. All right, as our own Bob O'Brien noted in his blog last week, there's a good probability that there won't be enough economic data this summer to send the market significantly higher or lower. Okay, this in turn is going to put the focus back onto corporate earnings, okay, and individual companies. Okay, and then, of course, we're talking about the dreaded green shoots. Okay, will there be signs of life? All right, here's what the market needs to see out of corporate earnings in order to sustain these levels and go higher.
As always, be sure to check out the written blog at www.mywealth.com/blog. Okay, so we're talking about some of the things that the markets need to see out of corporate earnings in order to sustain current levels and possibly go higher. All right, the first thing that we need to hear is that there's no more of this, well, it could be worse rhetoric. All right, the market needs to see that there are signs of recovery on the horizon. Less bad no longer equals good. Okay, so while we may have stabilized for a bit and the economy looks like it may be turning around, okay, companies need to provide somewhat positive guidance for the third quarter and beyond. Okay, so depending upon how the earnings come in, the analyst numbers that have come out have sort of been, looks like a hodgepodge, and I don't really know where these guys come up with these numbers from, but whether or not they beat is not really important, but rather that they're doing better than they did the previous quarter. Okay, the next thing we need to take a look at is how corporate layoffs are going to return companies to profitability. All right, have the increased layoffs allowed companies to reduce their costs enough to begin a return to profitability? Or are they going to have to, eliminate more jobs in the future? Okay, obviously more jobs lost means it's more difficulty for the economy in general, but this also could allow companies to operate a little bit leaner and meaner, which could allow them to eke out profits. So we're going to have to see how that plays out. Okay, the next thing that has to happen is the overall trend in earnings needs to move more positive. All right, this goes back to the first point a little bit, but basically what we're saying is that not the companies don't have to necessarily beat their numbers, okay, but they have to show improvement from their previous earnings period. Okay. The bar has been set pretty low right now by these analysts, so any misses in earnings are going to seem sort of bearish. All right, these they throw out these lowball numbers and really make it so that these companies can just get over these little hurdles. So we'll have to see what happens. Okay, next, the green shoots better not turn out to be weeds. All right, yeah, you hear a lot about green shoots in the economy, the stimulus package, that things are going to get better, and some of the companies, are going to benefit from the stimulus package more than others. All right, the companies that are expected to benefit from the package, they really need to show how that's going to happen in the future, okay, and that they have a positive plan and outlook for how it's going to impact their earnings going forward. Okay, lastly, we don't want to see any more throwing the baby out with the bathwater. All right, just this morning, non-farm payrolls came out, and it came in at 467,000 jobs lost, which was 100,000 worse than what the analyst consensus was at 363,000. All right, maybe it's time for these guys to stop guessing at these numbers in the economy and start turning their attention back to the stocks. All right, there's going to be some winners this earnings season, and of course, there's going to be some losers, but it's really time for the market to recognize those companies that are doing well. All right, so we need to differentiate ourselves a little bit here, and not just, like they say, throwing the baby out with the bathwater. The entire index goes down if more companies don't do better than companies that do. All right, so don't wait. Get educated. Come to www.mywealth.com, get into a course, and learn about how these relationships take place and what it means for the economy going forward.
As you can see, there's a lot riding on corporate earnings season, and the outlook right now appears to be pretty bleak. Okay, if corporate earnings can show signs of life and companies are beginning to turn it around, okay, then this could stabilize the markets for the next push higher. Okay, but if on the other hand, earnings come in worse than expected, then all the rhetoric and catchphrases for economic recovery won't amount to anything. All right, should the latter occur, keep an eye on the U.S. dollar, particularly the ETF UUP, okay, and the Japanese yen and its ETF FXY, okay, as the flight to safety trade will return and currency investors will pour out of the riskier currencies and return to the dollar and yen. All right, we're already starting to see a little bit of that today with the Dow down about 160 as I'm speaking right now, okay, after the poor non-farm payrolls numbers which came out earlier. All right, so earnings kick off next week with Alcoa. All right, let's hope it gets started on a positive note. Otherwise, it could turn out to be a very long summer. All right, to learn more about how the stock market affects the currency market, come check out our currency course at www.mywealth.com. All right, and to learn more about how earnings season can affect individual stocks and the market overall, you should also take a look at our investing course. Okay, I'm Mike Conlon. I'm wishing all of our viewers a happy 4th of July, and I hope to see you in the courses.